It is Wednesday. CPI came in slightly under expectations and markets are moving up. The most important CPI print since the last CPI print and until the next CPI print. Extremely compelling and important, and we should probably not talk about it for very long. But we still have meme coins popping all over the crypto space. As I said, Bitcoin on the way up, and we have a new Wednesday show, which I'm going to call Three Boomers from the South Talking About Memes. Today, that's myself, Christopher Inks, of course, will be the co-host now every Wednesday, as discussed, and comment in the family favorite over there, Fiboswanny. Guys, this is going to be amazing. We're going to share a lot of charts, trade ideas, thoughts on the market, and probably a lot of stupid banter. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of Wall Street. Before we get started, please subscribe to the channel and smash that like button. That's the first time I said smash the like button in probably years. Felt weird. It just came out, flowed right off the tongue. Guys, happy CPI day to those who celebrate. We're not going to talk about that too much, probably. We all know it's dog and pony show. We've discussed this. Nobody really trusts the numbers anyways, but it has to be mentioned because it's what everyone's talking about. And of course, that means the markets will make a move accordingly. I've got my co-host. I like to say that now, man. We can finally say it. Co-host here.
Finally.
Christopher Inks, who's going to play a little Southern bluegrass there on those guitars. Can we get a little, do you got a banjo? Can we get a little deliverance?
I don't have a banjo, man.
No, we can't get a little dueling banjos. Well, if we were going to do dueling banjos, we do have a guy here from Kentucky who could duel with you. Here he is.
Yeah, ding 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 ding.
That's right. Ding 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 ding. I mean, yeah. See, if you hear that on a river, run.
Yeah, run or row.
Are we like way too old? Do people still know the movie Deliverance?
God, I hope so.
Yeah, I hope so. Good movie.
Do you guys know that in the comments? Squeal like a pig. Did you guys squeal like a pig boy?
Good movie for the times. Put it that way.
Man, that was a movie of the times where they went out into the backwoods. I actually went whitewater kayaking on the river where they filmed it, the Chattooga, and they literally at every gift shop they sold shirts that made jokes about banjo music and Deliverance and male rape. I guess funny. So CPI day.
Oh,
as
that
I
note,
said,
CPI.
Chris, we're gonna. I know, we're chart guys here. Generally, it's important to focus on it because there was expected, I think, volatility, and a lot of the times when we get these drops of numbers, you see actually a big kind of algo probably driven move one way, and then the day sort of settle out in the other direction. So what are you thinking here?
Man, again, we were looking at 5.0, we got 4.9. I think the bigger story overall is that CPI continues to drop. So, we topped out about a year ago. What was it, like around 9.3 or something like that? And we've just continued to go down since then. So I think the bigger story is that more than just this one number itself is this trend of continuing down, which, more markets are forward looking. So if you see that trending down, then you see the pressure being taken off the Fed. That's the whole idea of lifting those rates. And so the market says, well, the Fed's going to, they already hinted at a pause at the last meeting there. What was it, last week?
Yeah.
And so I think it just gives more fuel for a pause. I think maybe we get another quarter point sometime prior to the fourth quarter, maybe, or at the beginning of the fourth quarter, maybe. But I think overall, I think the Fed hikes are done, and I think CPI continuing to drop just kind of confirms that.
Fib?
Yeah. I just looked at the Fed tracker. It's still up almost 80% for a pause for this next time. Not that it can't change over the next 30 days, but
we see those literally you'll see one announcement. It's like 20% chance. Instantaneous change. I love watching the Fed tracker and the numbers, and people are so sure. It's like when you're watching a football game, it's like 1% chance of a comeback and then that team wins. Right. How'd you guys calculate those numbers? I love that. But yeah, I think that at this point, barring any major black swan news, I think they're done for a bit.
Yeah.
Right. Like
Yeah,
if 10
right now,
banks
yep.
go down or something, we could see a pivot or, but, or if there's all quiet, but I think it's going to at least become a non-issue for the narrative for a bit. So do either of you guys have a Bitcoin chart pulled up? I think we should probably start there. It's making a nice move from the sort of mid 27s up over 28. Not huge, but these days we'll take whatever we got. Fib, I don't know what chart you got there. Is that Bitcoin?
Yeah, I got Bitcoin in many different time frames, whatever we want.
All
here.
right, let's take a look. Let's let you,
That's nice.
our
That's
esteemed colleague and guest.
Yeah. Well, looking at the 4 hour, one thing real quick, if you don't know me, I look at zones on the RSI, if we're in the bull zone or bear zone, but we're definitely in the bear zone at the moment. But the interesting thing is every time this has come down, every bear zone we've had over the last 3 times has not dropped below what I look at as a previous shallow fib. So when you look at let me scroll it over here. It's more along the lines of when I look at this. There's a little bit of a lag here. There we go. I started the bull zone back in here. So when this rallied up and came back down to these lows, when it did break back down into the bear zone, it never got back below the shallow fib at that point in time, rallied back up and then came back down to this point right here. So when we went into this bear zone, it still did not break below the previous shallow fib, which is the 38.2% level that I look at on my thresholds. So with that said, even though we're in this bear zone, we still have not broke down below this previous shallow fib level, which is at 27,230. That's kind of my
basically.
Yeah,
very strong support. I mean, even if you just draw a line, it's strong support. So the confluence you're giving with your system, right?
Yeah, and the interesting thing is the system's matching up with that horizontal, which is really nice. Because my fib levels come from my starting area is a little different than others. So like this zone that we're in right now, you start the fib here, where that's probably a level that a lot of people probably wouldn't start it. But what I try to do is I'm trying to measure the psychology changes in the market. And that's where that's why I call it the threshold. And we're jumping over jumping over the threshold from the bulls to the bears right here. We had a nice little correction. But the one thing that I like to see is based on this fibs that I'm looking at, the rally that we had today hit perfectly on my 61.8% level, which I like to see, because that proportion of the movement in the market is what I really look for, is the areas of that buying interest and selling interest. And we got the selling interest right where we should. We're definitely not into the bull zone yet, but it's early. Maybe we'll get a little bit more push later on today. But right now, with this being held here at that 27,230 and finding buying interest there, this bear zone to me is really not bearish. It's more consolidating. Markets can go 3 different directions, right? Up, down, or sideways. And even though we've corrected, we're in this sideways move. So that's my line in the sand at the moment, and it matches up really well on the daily too, which has kept the bull zone. So to me, a little bit more longer term is that this shallow fib is at 27,548, which is pretty close to that level on the 4 hour, and we're still finding some buying interest here. And I look for 3 consecutive settles underneath to break it, but so far we haven't broken into the bear zone. So I'm liking what I'm seeing on some support and maybe we get some buying interest to kind of push us out of this mess.
Yeah,
Chris, you're up. You want me to bring you up?
Yeah, go ahead. Everybody hates me for these kind of charts. If you guys have followed for any bit of time, I don't normally talk about these kind of parabolic moves. But, I posted it a few weeks back, this bottom kind of parallel line there. And just because it comes at this area, this interesting area of confluence on support here. Again, my big thing is that we've broken out through the pivot impulsively. So we've got this large candle spread, large spike of volume. We've retested it successfully. Most of the time when you do that, the pivot holds a support and you rally higher. So that's my big thing. But if we zoom out, again, we can see that we've got this kind of parabolic move here, which we've kind of hit. We've got the S1 pivot on the daily, again, providing support. Daily Stochh RSI is oversold here, starting to curl up. So, looking at all that, there's a lot going on there. I mean, I think basically if you're looking to go long, once you're jumping through this area here where you've got this descending, this whatever you want to call it, a bull flag or descending channel resistance right above the daily pivot here. So, basically around 29,870 or so. I think, if this is the bottom here, we should just rally impulsively through that. And then I think we're off to the races for a bit. But, again, people don't like to do this because everybody seems like puts it up there all the time. We can note here that if we follow the top line here, you can see this consolidation happening. And that's what you expect to see when you have a parabolic move. So it starts with wider moves and then they get kind of sharper and smaller consolidations as it finishes up. And doing that would take us up to 40 minimum, kind of 40 area, but potentially up to 50 here into June. And so, if I'm looking at that, that's what I'm looking at. The only other thing, I've still got this kind of, I've got these major resistance supports areas here. We found support on that right there. We're kind of trying to bounce up out of that, which this is the BLX. So it's not showing today's action. It's just showing yesterday's. But this pull right here that we're kind of mimicking is back here from 2019, this area right here. So again, we had that same support area there. We've got this, which is what we had, and that was an 86% rally after that into that June 2019 swing high. And so, if we're doing that, again, if we're doing that same similar thing right here with the support into that same kind of consolidation structure, that would give us a move up there toward that 50,000. So again, I posted out there. People get really upset because it sounds like everybody else that's just kind of saying, "Oh yeah, we're definitely going to do this nonsense." But there's actually a lot of reasoning behind what I'm looking at. So we'll see if we can get that. Right now, it still looks good in terms of Wyckoff. I mean, man, everybody's arguing. But I'm gonna tell you what, this is your range right here. I've been talking about it since June. You had the terminal shakeout down here. Everything has happened in this way as I said it would prior to it happening, if you guys have been following me. And so we get to this point up here. And so our range is this area down here. And, you get what we call a jump across the creek, which is when you break out of the resistance. And then you get what you call sometimes a back up to the edge of the creek, which is just to pull back to the previous supply. And that's kind of what we're looking at here. And the fact that we've remained up here for almost a month now without breaking back down into the range is very constructive bullishly. That's what you want to see when you have a back up the edge of the creek. And so again, even with Wyckoff, it looks like we'll pop out higher.
We discussed this. It's called a crick. We're all in the south.
A crick, yeah.
We're talking about canoeing down a river, so it's a crick.
Here, let me show you something on that timing there, Chris. Yeah, throw my chart up there.
And guys, I also want to ask you, just so we can be productive with it. I'm putting your screen back up. Also, let people know if you're actively trading this and you know what that trade is.
Okay.
Oh yeah, absolutely. No, but one thing I wanted to show here, this is something that I do. I'm sure there's other technicians that do it, but a lot of times when I look at trend lines and I take the furthest point underneath the trend line to the trend line itself, and I look for that rate of change, and at the break point, I look at that as a minimum target. Sometimes it goes past it, but usually I use it as a minimum target. And as you can see here, you take that same rate of change here and it hit the target, go in the other direction, it hit the target here. On this blue one, it worked up, it hit here, actually went up, came back down, hit support, and then went further. When this one broke, it hit the target down here, and now we're on this one. So the way I look at this is it broke, and we went up a little bit, had a little bit of throwback to the line, and working our way back to the upside. So as long as that daily kind of holds that bull support or that bullish zone on my chart for my threshold, that's going to be the line in the sand for this to continue. And if you take that rate of change from the furthest point underneath this trend line, it gives you that 50K area. Now, I have other timing like Chris that if you do have a little bit of a parabolic move, I do have that 48K by the end of June at the earliest. Now, of course, timing is one of the toughest things in TA, but I do like the parabolic look. I like how the confluence of what Chris is looking at matches what I'm looking at, and I'm looking at it from a completely different way. So I really like the confluence that we're seeing there to where this trend line broke. We're still on the daily bull. We still have that 48K possibility working to the upside. And yes, I am long. I've been long for a while on my 4-hour and my daily trades. I've gotten out of a few profits here and there, but I'm still long both time frames.
Yeah, and I'm long as well. I've been long since if anybody's following me, we had, when we were talking about the lows down here. So I'm still long from down there. I've got a couple other entries along the way. Most recently, I'm long right now from, let me look at my thing here, 27,580. So that kind of gets us, let me see here, 27,580. Yeah. So it was in this consolidation. Oh man, that's still the wrong chart there. Let me pull up on the other chart there real quick. It was round in this recent consolidation that we've got.
Yeah, on the pivot, right? Yeah.
Yeah, right. Yeah, right in there. Yeah, just basically right in this area right here. Looking for, I was looking for this breakout. Stop loss right below the swing low over here in case it did break down. But again, as you said, there's even a line here that kind of gives you support. And so looking for consolidation on that S1 pivot to pop up, and that's what we've got so far. So feeling pretty good about it at the moment.
I think the beauty of Bitcoin is that, like, still, even after all this time, it just trades so cleanly with TA versus most other assets, I think, that you see. So I mean, I'm in conflicts with you guys. It almost makes me nervous, to be honest. But like when you zoom out here, right? I mean, to me, this 28,600 level is basically just what we've been hugging since the move up in March. And that was the low of the entire market between the 65 and 69K highs. Yeah. So just as a very obvious level, but like, I don't see how you can be bearish above this 25,212.
Yeah.
Right. Because that was the first higher high since 69K, right? In this market structure going down, major volume up to it and coming through it. So right now we're just, everything above this is a higher high and a new, a series of higher lows and higher highs coming off that bottom. I mean, I guess you could get a little pause from the fact that we're below the 50 MA, but usually we don't stay there too long. Right. And I mean, so many things here, right? I mean, you had this with that 2512 was basically a perfect neckline for a inverse head and shoulders.
Yep.
That takes you to 41,307. Even if you're just patiently playing that pattern that broke out there, the only thing I guess that gives me pause then is, do we get a retest of that of that neckline? Like, do we come back down to 2512? That wouldn't surprise me at all.
Yeah, it's definitely possible. My concern on all that is that it seems to be where everybody's wanting it to go.
Of course, and it never does. That means we either get 23 or 26, right? I mean, it's
yeah. But you got to understand, a lot of that pulling back to that is people who missed the move up. So again, when we came off that low, I told everybody, listen, the max pain, the way this works is everybody talks about max pain, but not very many retail traders really understand what that means. And it wasn't to, hey, let's drop down to 12,000, which was just another few percent off, coming down from the all-time high, right? Max pain is this, everybody's expected to do that. Everybody's promised it's going to go down lower, and instead it goes up, and you're too damn nervous to jump in. You're too scared to jump in. So you keep watching it go up and up and up, and you can't convince yourself to get in. And so what happens is then when you get to these, these levels like where we're at, where we kind of hold, it's more hope that it goes back down to a technical level rather than is it actually going to. And if we've studied Bitcoin over the years, it doesn't often go back, especially in the start of a bull move as it's moving up.
Yeah,
often
it doesn't
just
give
kind
you
of
the
pulls
chance.
back a bit and goes. Yeah. So
yeah.
I mean,
I'll say in confluence with that, like I know we're talking TA here, but I think that the clear case for max pain being up is even greater here because of FTX, Voyager, Celsius, BlockFi, like just rationally, and especially FTX, because I think it was largely retail who were like investing and holding in their bank account that lost their money on BlockFi, Celsius, and Voyager. But I would say a meaningful percentage of crypto native hedge funds, traders, people with size were holding their funds on FTX. And those were the people who really believed it and actively traded this market. And there's nothing worse, I hate to say, than seeing price go up while your money is gone or locked away in Chapter 11 bankruptcy, right?
Yeah.
Those
Mount
people
Gox.
are literally praying. Like, I know even... Listen, I actually don't want this because whatever, it's gone. But like as a Voyager creditor, we're going to get back 37% of our balance, which by the way is 50% lower than they're marking it to last June, right? When Bitcoin was 17,000.
Of
But
course,
either way, like,
of course.
By the way, there's plenty of people who I can tell you have been messaging me who say, listen, I'm a Voyager creditor. I just want, Bitcoin to be high, get my money back, and then it goes to 10K so I can get most of my position back, right? That doesn't happen for you.
Right.
It just doesn't.
No,
it just doesn't. So listen, the title here is Memes Gone Wild. You have to be paying attention to meme coins right now, whether you're going to trade them or not. Chris, I know you threw me a couple names. I just like, I can't talk. I can't. Like, we have to, should we look at Pepe? Like, I haven't even looked at the charts.
Yeah, that's Fibbo's favorite chart right there.
Let's take a look. I don't know what I'm doing here. I'm going to share your screen right now while I make mistakes hitting whichever charts I'm trying to hit here.
Yeah, so I posted on Twitter there a Pepe chart, and I was looking at the idea that we've got basically a 1-2, and we were working on 3 here. We were looking for the breakout above this purple line, this descending channel here, and then we had an initial wave 3 target and a secondary target at the wave 5 area, and that's actually what we hit here. So we kind of hit that furthermost target. We've pulled back what appears to be 3 waves, so A, B, potentially C here. You can see that's about a 61.8 pullback. So, I mean, for me, I'm looking for, not that I traded, by the way, guys, I don't trade Pepe. I don't trade a lot of these kind of coins.
I call it PP, so you know that I'm not taking it too seriously.
But I just want people to think, I had somebody accuse me of wanting to dump my Bitcoin bags on them. Man,
you're moving the markets. I used to listen. I swear to God, in 2021, it felt like on Twitter I was the reason that Bitcoin had gone into a bear market. So,
so right now we're kind of doing sideways here. I want to see some impulsive breakout, but really, if we're getting again, I look for that impulsive breakout above the hourly pivot right now, which is that 26,722 kind of area. If we can get that, so we're talking about larger candle spread, spike of volume kind of thing as we get through that. I think we get up here at least to the R3 and probably higher. So that R3 is going to get you around 849,100. So I think we, at least get that as we're doing that. If this is actually wave 4 here, or, it could be a wave 2. I could be off on that. But I mean, if it's wave 4, then minimally, we're generally looking at least at this R2 pivot area right around 62,9078.
I'm gonna have to buy Pepe. Like, am I gonna literally have to buy this PP piece of PP? I can't. I can't. The thing is, like, these are like rationally, it's very hard to want to look at it. But as a trader, this is where the volume and liquidity are in crypto right now. So if you want to trade in the crypto market, it's almost like, and I'm not going to probably, but it's almost like you have to like mentally dismiss the fact that this is literally money printed out of air.
Yeah, exactly.
Yep.
Fib?
All right. Yep. Throw up my PP chart.
Throw your PP on the screen. Let's go.
Throw my PP on the screen.
There's a bunch of 13-year-old boys in here. What's going on? Seriously.
We're the oldest guys on YouTube, and I somehow make us seem like the least mature because you guys have to follow my lead. Congrats.
There we go. Not a lot of data to go off of, for at least from what I look at, but for what I can see so far, looking at that trend line break, taking the rate of change like we just talked about, I got a target which matches this low right here, based off of that, which is like a shitload of zeros, 833.
We've made a policy to just say the last numbers or something because who God knows.
833 is that first target that I'm looking at. We went into the bear zone here, but the ADX has been dropping ever since, so it's a little bit more of consolidation with an edge to the bears. And we're just kind of touching this 61.8% level at 1862, and have not had 3 settles underneath. So we are getting a little bit of support there, but because there's not a lot of momentum on the bearish side to push us through that first support. But as soon as we do have some momentum on that, I would see that 833 target as that first area that I would, not me, I don't buy it, but others might want to be looking at that level. So what level were you at, Chris, on that breakout to the downside? What was that R1? I think it was R1.
The S1 down here?
Same.
S1.
Literally the same.
R1, sorry.
Yeah, it's
at
slightly lower.
81,862 kind of area.
Okay.
Yeah. I mean, even if you just look at, I was just doing it while you guys were talking because I have not looked at the PP chart. But I mean, if you just look simply at supply and demand, everything aligns to that area you're talking about right there.
Yeah.
Right. I think the bottom of that is 8.4. But yeah, I mean, it's amazing the confidence you get. I think you'd have to first see this breakdown through this 148 area, which we haven't gotten. So I think that could, but I think you're just between these two, right?
Yeah.
There's major demand here. And for people who are wondering like why you draw these zones the way you do, everybody kind of does it differently. But in my mind, I just take kind of the last down candle before a big move up and the last up candle before a big move down. The reason being that you got to assume there were a lot of people here that were waiting to buy and got left behind. So their bids are there. And here there was a lot of people going, oh shit, there was a wick. Like I'm going to wait to sell again when it comes up to those highs. And then they missed their chance. And now they're waiting for their opportunity to sell. So they just have sitting bids. That causes supply. Your bids are waiting below and your asks are waiting above. So there's almost guaranteed liquidity, and that's why you see people whales pushing price into those areas, often to fill their bids on the other side. But yeah, I mean, I would if I was going to trade this at this point, I have just because I'm so disinterested in it. I think I'd be looking to buy it down in the bottom and not even buy it higher, even on a breakout. I just don't. I don't know. But that's just because I have like a sort of a disassociation with being able to bring myself mentally to do this. I will say, guys, I will not mention it. I never mentioned it. I literally got like some random DM that was like, there's a project launching. You should buy some. And it was a fair launch and whatever. And I bought it 2 days ago and it's up about 23x.
Nice.
You can't chart that. You can't chart that. And I'm already like obviously selling some, right? Because,
because why not?
And then the same people are in my DMs going, it's going to pull a PP and go to $1 billion market cap. Sell. But yeah, I've only touched 2 meme coins and I just don't bring them up because then, you know, I'll get accused of something. But that was like, I wasn't trading a chart. Literally, I was like, I guess I'll do. I literally said there's a lottery ticket, like 100x or 0. Let's go. Right? It was like the Kentucky Derby, right? For something Fib over there is comfortable with. Are you guys looking at anything else, Chris? I think you mentioned a few other charts that you're specifically looking at. We can dive into.
Yeah, I've got Apex over here right now as well. I love the resistance here. It's like almost perfect hitting it.
Is this a meme? I don't even know what it is. Not.
Yeah, I don't even know what this is.
An actual thing. There's an actual thing.
It's something. I don't know. I'll be honest with you. I hear a lot of people talking about it.
We don't care. Right. Yeah.
What's the ticker on that? Apex, you said?
APEX.
All right. I'm going to try to pull it up. My system will
People
probably
are saying that the coin I bought is Ben. It's definitely not. I did not buy Ben coin or have any inside information on Ben. Go ahead. Sorry.
Yes. So if I'm looking here at Apex, man, I mean, I think it looks like we got a 1 and a 2. It looks like we've got, you know, another 1, 2, 3, 4, 5. So 1, 2 here heading up. So off this initial 1 and 2, we've got a wave 3 up there to about $1 and basically $1, almost $1.06 is what we're looking at up there. So I would be looking, you know, if I'm somebody, you know, again, I'm not trading this, I'm not buying this myself, but I've seen people talking about it online. You can see that the daily Stochastic RSI is reset down into oversold. We're just below the pivot here. If we can get an impulsive breakout above that daily pivot right around 0.364, we should definitely have a target of this descending channel or this descending resistance. If we can impulsively break out above that and hold above it, I think it sends us up here for wave 3 up there. But it's so clean. This resistance here, this daily resistance from back in, what is this here? October of last year. And then I mean, that's as clean as it gets. Yeah. And then again here in April, man. I mean, that's just so clean. You got to watch.
By the way, James says Apex is Bybit's decentralized exchange. We have someone here doing our research.
Well, there we know. Now we know.
And I don't know why I just clicked on that, but no, I also did not buy SFM. No idea what that is. And Drusified wanted to contribute to our maturity and said PP makes for a strong stream. Get it? I do.
Oh man, see, you're not the only 13-year-olds here, right?
Yeah.
And we got 3 boomers on here with strong streams.
Yeah.
The strongest streams. It's unbelievable. It's not usual for our age. So you'd be looking to trade that. Would you be looking to trade that on a flip of that pivot or a flip of the descending red line?
Me personally, I think I'd do the flip of the pivot into the resistance, into that descending resistance, and then look to continue on if we could get a strong breakout above that. If you're really risk adverse, I would probably wait for an impulsive breakout above the descending resistance. But I think, again, if you're a little bit more risk tolerant, I think you can jump in on that impulsive breakout. And I'm not just saying a break, guys, impulsive breakout, large candle spread, large spike of volume through that pivot. I think that kind of opens up, those kind of moves higher there.
Perfect. Fib, I see you got something, so I'm going to.
No,
blind.
I don't. I tried to pull it up, and my system said, "Hey, go back to your real job."
What's your real job? Memeing with friends on the internet? Cool. Chris,
No, I tried to. I don't have anything for Apex. I can't even.
Yeah, it's
maybe you had
some
a
of these are
different
just like
idea.
on one or two
We'll
exchanges.
let Chris run. We can just mock Chris's ideas. Let him go.
I've got ARB here, man. Again, another one
I
people
have an
talking
ARB chart.
about. We have this, again, a great descending resistance from about April 18th here that we've come through. We have this, basically, it looks like capitulation here on the breakdown below the range low. We got a lot, a spike of volume there. And then we went to a doji the next day, right below the channel, the range lows here. And today we're getting this impulsive breakout higher. So once again, you can look for this impulsive breakout as descending resistance. That'll give you a target at least of the range EQ here, the equilibrium right around $1.34. If not, $1.43 for the daily pivot. But again, if you're getting impulsive breakout above that daily pivot, you should be looking higher there. If we just do it based on the height of this consolidation, a breakout higher, above that
That's
pivot.
going to take you right to that R2.
Well,
from up there.
We'll do it here.
Get
Run through the
I thought you meant from the
R5.
breakout. Yeah, I thought you meant from the breakout, not from the peak. Yeah.
What's the percentage on that move?
That's
Big lead.
79.91, almost 80%.
Large.
All right.
Large. Yeah,
So
my
pretty
chart
good
looks
move there.
exactly the same on ARB, which always makes me feel good. But then I'm like, I guess who taught me this, right?
Right. So we
So,
got the RSI and the Stoke RSI looking good as well. So yeah.
When the chart fits in the middle of the screen, very small, I think everybody's charts are going to look the same.
Yeah, that's right. But once again, if you're just looking from supply demand, that was the EQ right there that he's talking about, and that same target. That's exactly where this impulsive move down started after all this consolidation. So that's the natural target by the same sort of thinking. When you get confluence of like multiple strategies and ideas, it's a pretty decent sign.
Yeah.
What
By
other
the way,
memes do
guys,
you have for us? Yeah, go ahead.
in case you haven't heard, this is I'm gonna tell you the way it is. All these systems and whatnot out here, generally they're gonna, if you do them correctly, they'll take you to the same general target areas. So as you're seeing here, Fibbo's way that he looks at it, Scott's way that he looks at the way that I look at it, all different, 3 different ways, and we're still hitting those same target areas. So this is just kind of just a reminder that if you're trying to do one system because somebody promised you it was the best way to do it and you're struggling with it, there's a system out there that's going to work for you. And as long as you're doing it correctly, you're going to get the same results. So don't get stuck in that. All right.
Yeah, the proper system is the one where you put a stop loss and don't move it. That's
Yeah,
a good
there you
system.
go. Right. But that's
Fib, you got
hard.
something?
That's hard. So we got Turbo here. Another one I've heard.
I don't
people
have
saying-
any of these meme coins.
Dude, run it back, Turbo. Yeah, I mean, listen, and everyone should know, like, we're doing this for fun. But these are like 1 hour charts with like 3 or 4 days, like a week of history. So you can't draw too many grand
not
conclusions.
trading it, but again, I see it on my feed a lot with people, and so I figure I'll throw it up here. We had a nice clean break above this descending resistance. We've come back and kind of tested it a few times as support. We pushed up, we consolidated, we thrust it up here again. So really looking initially for this kind of this resistance area here, right around what is that? Whoops. 15294. If we can get that minimally, we should be looking at the pivot there at 18945. But as again, if the others are going, this one's probably going to go too. So if you get an impulsive breakout above there, I think we'll hit the R1 pivot and then pull back. I think we'll kind of hit this 323 area and then pull back to the pivot and before we head up. So my expectation is that we probably get something like this, and we get a pull back down here, and then we're off to the races to rally on up with turbo there. So
by the way, Boomer, Revy says I made money on turbo too, and then says, guys, these are old coins. The meme coins have a very short life. So apparently if we're on the 1 hour chart when it's already hit a centralized exchange where you can actually chart it, we're already dead.
Yeah. I don't tend to.
All the action happened, I think, before these charts existed. If you look on like the Uniswap WETH charts or something.
Yeah. but
all right, so
we're still making good money here, though.
Yeah, oh, for sure. Yeah, absolutely. I mean, listen, the fact is, in the crypto market, if there's one thing I've learned from going through multiple cycles, and I hate to say this, if you're just trading, like you want to be in the newer stuff because the old stuff has so many bag holders who are just looking to get out. There's like endless supply on 2017 coins, right? Like if you just accept that, at least there's not like a million bag holders looking to sell at any move up on these new things. I'm not endorsing them necessarily. It's like when people, say like, what's going to move the biggest in the next bull market? And my answer is usually something that doesn't exist yet.
Yeah, exactly.
Right. Like just, whatever that cycle, if it's DeFi summer or whatever, whatever it is at that time, the narrative, that's what's going to move. Oh, sorry.
Yeah.
Oh, the doggy.
Yeah.
No more dogs, just
here.
frogs. No more dogs, just frogs.
But yeah, man, I mean, again, you're finding support here right at this previous area of resistance. And that's good. We're right just above that S1 pivot here on the daily. RSI almost reset. Stoke RSI did. Stoke RSI is actually crossing bullishly right now. Let me see here. Yeah, this I would look probably for a breakout above this kind of resistance here, this descending resistance. So again, it's going to get you basically around the pivot. So once again, impulsive breakout above that pivot minimally should have you looking up here at around 10 cents. If you can break out through this kind of resistance right above that, this area right here, there's no reason why you shouldn't be looking up here around the R5 pivot up at about 15 cents going on that. And, once you're up there, now you're at that previous swing high. And so all of a sudden it starts looking like, do we have some sort of leading diagonal going, 1, 2, 3. Well, no, actually we've got, no, that looks like 1, 2, 3, 4, 5. So this would be a 1, 2. So I'll just give you guys a target on that, which, again, is just minimal expected based on that being a 1 and this being a 2 here. Wave 3 up here at around 24 cents. Minimum expected wave 5 up around 28.2 cents, which just gets you it gets you right here where where you've got this previous resistance and support area here. So real good target if we can get that breakout. Do it step by step, locally, target, and then bigger target up there. If you do that instead of just buying down there and hoping it goes way up to the other target, you're going to make a lot more money, because a lot of times when you're sitting there hoping, which is what a lot of retail does, unfortunately, they end up holding the bag. And then your meme coin that was fired up so good becomes your bag holding for the next bull run, right? What Scott was just talking about.
And then you're that guy who's like, oh, if it'll only just go back up to my entry in 2037. Good. I'm absolutely good. But I mean, just to take a scan of the market here, and Rand Nooner showed me this the other day, and I don't know, I find it mesmerizing. Crypto bubbles. Have you guys seen this?
Oh, wow. No.
Was it just visualizes the market? It's kind of cool, right? Like, it's like watching the Pink Floyd Laser Light Show.
There we go.
I think they move around a little bit, but this gives you it's actually just a cool visualization of what's happening in the market. And obviously things are very, very green right now, right? The larger bubbles are obviously the bigger moves. And I would say that the one thing that's resonating with me in all of our comments is I haven't heard anyone here throwing up a short idea. Yeah. Right. Yeah. So, I mean, to me, that means that everybody's either looking to buy dips or is generally feeling bullish and positive about the market. Is that accurate?
Yeah. They should be.
Yeah.
Hey, Chris, where's your buy on Doge? Because mine actually hit already on mine at 7 cents.
Do you have it? Fib, bring your chart up. Do you have a Doge chart?
Yeah, it's not updated greatly, but I have a chart.
Who cares? We do it. Dude, this is live. This is live. I think we'd enjoy watching you do it. So here, I'm just bringing you up. You got Doge. Draw some things.
Yeah, well, it went into the bear zone right here. I haven't updated it yet, but it stayed in the bear zone. It actually touched a couple of times and did not break in, so it kept the trend to the downside. So what happens is this threshold level, this 200% becomes a buy level, and it actually wicked through it. So there was a buy here off of this low in here, but we're still in the bear zone, so you got to be, put your stops in, those kind of things. But based on this, we're still in the bear zone, but it did get far enough to signal a long if you wanted to long it and work your way to the upside. I don't have it updated to where.
What's that? What's that 200% level?
0.0713.
0.0713. Yeah, I've got 0.07069 kind of area. Yeah.
It's probably going to be relatively the same area. It matches pretty nicely on this previous low back here. What was that? March 27th. So that's where I'm at on that. Hopium, maybe. I don't have anything else with it.
I think it's hopium. I mean, if the market stays bullish, Doge should benefit. I don't think that's, Hey, should we talk? But I mean, somebody made a good point here. Where is he? Hey, Diego said, hey, these are fun, but come on, man. Come on. The USD is the real thing for today. DXY, Forex, etc. And we do have Chris here. So should we take a look at the dollar to give us some context here?
Yeah, we can definitely.
We're all over the damn place. We can go from Pepe to a dollar as if they're both equivalent assets in a matter of 5 minutes.
Yeah.
I mean, I got mine up here first if you want me to start.
Go for it.
Yeah. Bear zone is still intact. It actually just touched the range, did not break into the new range here on the 4 hour. And it actually tagged the top of the fib extension zone. So that 101.63 is that sell interest area and has kind of kept us in the bear zone. Target for me, I'm not doing anything at the moment on this. Previous shallow fib back here at 102.24 never even broke when it went into the bull zone here, and also here never broke the previous shallow fib, so it was more consolidation, so sideways to even lower. So on all my time frames, I'm still very bearish on the dollar.
Yes, as long as talk dirty to me.
Yeah, and my target 100.27 is even, that's my first level to even consider buying it. I'm gonna have to kind of look at that and play it by ear, see what it looks like once that target hits, if it hits. But that's where I'm at on that. And just still bearish on the 4 hour. I think on the daily, the daily is still well into the bear zone. Bears are still in control on the ADX. Not a lot of momentum, so you're getting the sideways action. The shallow fibs here, so the selling interest levels right in this area with a 99.28 target on the daily. So I'm still very, very bearish on the dollar.
And Frisco, I hesitate to bring this up, but he said we already talked about piss. Why not shit? If we're going from PP to the dollar, I think that's accurate. I say we send the dollar right down to 90, but I'm going to let Chris talk.
Yeah, I mean, locally right
XY,
now,
not the dollar.
big picture. We're getting rejected here at the daily pivot. So if we can get a breakdown below this swing low, that should carry us down at least to the S3. Is usually one thing just in terms of pivots, which would get us right around 98.33. What we can notice here is even though we have this breakdown on the dollar, right, the RSI still is not broken down into oversold yet.
That's right. It's going to
Stoke
get there.
RSI, didn't break down yet either. We've had consolidation here. Now, if we look at this, we go, okay, maybe we got Adam and Eve double bottom here, maybe. But that isn't even confirmed until we break out above the swing high up here at 105.883. If we don't ever get there, then that does not get confirmed. But for right now, it looks like we're continuing down further. If we jump here, let me see, the 4 hour locally here. This looks like we've got an ABC up, ABC down, and then 1, 2, 3, 4, 5. So that would be a flat correction right here. And based on that, but potentially like a 1 here, and then this is A, and this is B, and then this is C, which actually gives us how much of a retracement there? That gives us around almost a 61.8 retracement, so solid move back up. And then we've got 1, 2, 3, 4, 5, and then a lower high. So again, looks like a 1, 2, 3 here. So if I look at this as a 1, 2, You know, that'll get us here at wave 3 down here at 99.6, wave 5 down around 99.08.
Boom, right where I'm looking.
Yeah. So, I mean, I think we do that again. That kind of keeps us right around that 100 area. We should generally expect a bounce around 100 just because it's such a psychological level. If we really drop through it like really impulsively, instead of getting a bounce at it, it could just end up working as resistance. But I think ultimately, we're heading down into the 80s probably overall.
89. 89. We're going. And by the way, then I think that this is, that means if the dollar does that, right, that we're going to get some sort of like absolutely ripping stock market right before we go into full on freaking depression. And then the dollar
I can't see
up.
the comments.
Then the dollar rips up to like 120 here. I mean, just real quick, like, I know it's a little iffy left shoulder, but you kind of have this head and shoulders potentially forming on the DXY. This is now the weekly, right? Mm-hmm. And so, I mean, if we break down below this kind of 100 area, I mean, look out below, right? From this move, you're still going down to 98 to 99 to get into the golden pocket there. I pulled some fibs for you because it's in your name. I didn't have those there until you did it.
Nice.
Looking at the 200 weekly MA and this obvious level, that's 97. But if those break, you're going down. I mean, in my opinion, just like what Chris said, I think you're going down to this entire sort of area of consolidation down here. Right. And that's going to bring it down to 89, 90. And then, by the way, you do this, and then we go into a massive bear market on stocks and everything else.
Quite potential. Yep.
Yeah, I can't see the comments, but when Chris said Adam and Eve double bottom, I can't even imagine the amount of comments that came through on that one.
They're not, we're not getting it as aggressive over there, but now that you've sparked it, I think it might.
Way to go, Philo.
Yeah.
Man, you're a bad influence.
But it's not you. I mean, it's not like he's the one who named it that. I mean, they literally named that chart pattern because it looks like a man and a woman's unmentionables. Right?
And everything looks quiet when Scott says that.
So what do you think? I kept it pretty, apparently like, and right now I think everyone on the planet, by the way, is watching the Biden congressional hearings. Is what I'm literally getting messages, like texts all over the place. Are you seeing this crap? So there's some things happening apparently in the world right now that are extremely important that I'm largely unaware of, but apparently damning evidence that the Bidens took money from foreign governments, which I just call Wednesday.
Yeah, they all do. They all do.
Yeah.
If you don't think your favorite politician does, you're misled, I think.
I can't believe. I will say, I said this on Twitter yesterday. I've gone very deep recently. I don't do politics. Everyone should know that. So it's weird that I'm even mentioning it. But because I dislike Trump and Biden so much collectively, it's like I'm looking for a breath of anything. And actually, I've been down an RFK rabbit hole. I'm not so thrilled about a lot of his kind of further out stuff. But in general, like a extremely moderate guy that has the Kennedy name and seems to actually look at evidence of things. And the best thing was then yesterday night, I listened to him on the All In podcast, and like 4 questions, he said, I don't know. When do you ever hear a politician just be like, just go like, I don't know. I don't have an opinion on that yet. I'll do more research. You don't ever hear that.
Yep. Yeah, because everybody has everything curated for them when it comes to politics, right? It's not even about what can you do. It's about how bad can you make your opponents look. And I think we all lose out, if you vote, if you live in the country, I think we all just end up losing out. It's no longer about what can somebody do. It's about how bad can you make your opponent look. Both sides of the aisle, everybody. It's awful.
Yeah, if I was listening to that, it would have been the Peanuts teacher, wah, 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 wah. And then all of a sudden I would hear wah, 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 wah. I don't know. Don't want, and that would actually stick out.
That's right, but that's what stuck out to me. I just told you, exactly. Like, forget. Everyone has their like opinions and views, but like I just was impressed that the guy actually said, "I'm going to do more research on that before I offer an opinion here publicly." That's pretty cool. Awesome. Yeah, I enjoyed that part. So, guys, as we come to the end here, right, we shared a bunch of charts, like broad strokes, I guess, and we started there. Like I said, it seems that all of us are kind of generally bullish, buying dips. So then let me ask you, what would change that for you? Like, what would change this general bias where you might start looking for shorts or be concerned about lower lows or, lower bottom, anything like that? Either of you can jump in.
Good.
Yeah. First, mine's the that 27,230 level. on the 4 hour, there's two different things. One would be 3 consecutive 4 hour candles settled underneath that level. Would be a
Closing
sell
below, right? Yeah.
Yeah, it would be a sell signal for me. Or if the daily chart goes into my bear zone and has 3 consecutive settles under that shallow fib, which is
I can bring it up.
27.548. It's all right around that 27.2, 27.5 area. A break of that brings in that 25.3, 25.4.
Right, but that's right. Just to be clear, that doesn't make you bearish. It just that still
No,
has
no,
you
no.
looking.
Just-
That
just
still
a
has you
further
looking for a
correction.
lower long entry, which I think
Yeah.
nobody's mad at. So that makes perfect sense. I guess
Yep.
I'm looking for what would, in your mind, what would be like, oh shit, we're going below 16, you know, or like that the bear market's not over. I was wrong, right?
Yeah, flip up my chart and I'll show you the
Yeah.
or my screen here. The weekly is what I would really watch. So for me, a breakdown of the weekly. So in other words, it has to get, I think, right around 22 and a half or so.
Yeah.
Once I get below that, then I mean, you're talking just a shit show. If it gets down below that. So if we get down to that 25 area, that 25.4, that would be the next area of really buying support. And I think a lot of people that didn't buy on this rally on the first time, everyone that thought it was a bull trap and didn't get in, if it got down to that 25.4 area, I think
Biggest bull
you're
trap
going to
of
get
all
two
time.
types of buyers. You're going to get the people that sold the top and are going to buy back, and then you're going to get everyone else that didn't get to buy the first time. And you're going to get that double psychology of buying interest that I think can launch us on that move that Chris and I are kind of talking about. 48 to 50K in the next several months, but that's where I'm at on that. So 22 and a half would be like the line in the sand for me. Would switch the weekly back into a bear zone, and that would be ugly, especially this time. The timing of this would be very bad to have a weekly go bearish because with the halving coming up next year, it would just be really an odd look for the market.
Yeah, it would make you think that we would just chop in a lower range than this until
For a
the
long
halving,
time,
which I don't think people generally want, right? Like, I don't think breaking below 22 doesn't mean we're going to 10, but it might mean that we're just like in the high teens for the next 6 months, and I don't think anybody's too excited about that.
Yep.
Chris, what's your general view there that would make you potentially bearish?
Well, again, with Wyckoff, I mean, it's hard to imagine that it's even going, I mean, this looks so cleanly like accumulation down here.
It does.
I'm calling that the swing pattern.
The swing.
Now we're definitely showing our age, the Wayne's Worlders. Yeah.
But I mean, really, honestly, guys, I don't think, I think it would have to come down even further for me to really get bearish, because I think even if we drop under Fib's level, I could see we've got this weekly demand structure here, this wick. In 20,950 area, I would look, if it dropped down below Fib's levels, where I would look to get that reversal. But I mean, for me, I think we'd have to get below this high volume node, this high volume ledge over here, right around 16,850 or so. Right. To really kind of say, okay, well, now we're going to get loose. I mean, I'll start looking.
Right, because that's below the capitulation volume of the FTX move. I mean, that would be fucking terrifying.
Yeah. But honestly, I just, again, we can't guarantee anything. But right now, I think if you're even considering that kind of drop right now, I don't think you're trading right. I don't think you're trading correctly. We're clearly, as you mentioned earlier, in an uptrend. As Fibble was saying, it's just a pullback. As you were saying, it's just a pullback right now, even if it drops down to 20. I think people get way too emotionally outside what they're looking at for that. So that's what I'd be looking at. Really, it's the dollar, and the dollar has pulled back so significantly off that almost that 115 area that we'd have to get pretty close to that before I start going, okay, well, maybe the markets are actually going to continue lower. But we've just made such a big move since then, and it's been in these quicker spurts that it's hard to get something nearby that would tell you definitely that you really should be concerned about a reversal or about it continuing, in the lower at this point. So, and I don't think a lot of retail traders, unfortunately, will see that. It's this idea of, if we drop past this one level right where we're at, all of a sudden we become bearish, right?
Yeah, for sure. Well, here we are, guys, up against time. That was awesome. I really enjoyed that. Really,
good times. Yeah,
now you guys
thanks
can
for having me, for sure.
Now promote yourselves. Have at it, because you guys hang out together Me sometimes.
Yeah, I moved all my stuff over to Chris's platform, so I'll let Chris.
Yeah, so you can
let us know where everyone's at.
Yeah, you guys can catch us. You can follow me at TX West Capital on Twitter. You can follow Fibo at Fiboswanny on Twitter. Like Fibo said, recently he's come over to join us over here at Texas West Capital, which is great because he offers, again, a little bit different look at the markets there. So you can sign up for his services over there. Right now, you can do it at TexasWestCapital.com. But just yesterday, we launched a separate service now. We finally back to automated Discord access, which is fantastic. It's going to save me hours a day.
I remember those days. I remember the days of managing that Discord. My God. Yeah.
Well, we had a bot for a while, and it was automatic, and then the bot crapped out on us. And so for months now, I've been doing manually. But if you go over to TexasWest.capital, you can get in there right now. As we test this new Discord management system, you could jump over there. I've got 3 months of tier 3. That's our elite level there. You can get that for $50 a month for the first 3 months, and normally it's $199 a month. But you can get actually into that with that special right there. If you want to join Fibo, though, go to TexasWestCapital.com, click on Threshold Theory, and you can get logged in there. We'll have it all moved over to TexasWest.capital soon, but we just released that last night. Just want to make sure that the automated bot there is working so I can breathe again.
I can't even imagine. Yeah, guys, go check them out. Seriously. Absolutely amazing stuff, guys. Thank you very much. Of course, we'll be back next Wednesday. We're going to do this. We're going to build it up. We're going to be consistent, and it's going to be amazing. Fib, thank you, man. I'm sorry I didn't see you at the Kentucky Derby.
Nope,
Chris, I guess I'm sorry I didn't see you at the Kentucky Derby either, but there's no expectation that I would have. But Fib and I were messaging, and I was just going down the rabbit hole of Churchill Downs, and there was no escaping at that point. So
yeah, I'm seeing pictures. I'm seeing pictures of you like in the winner's circle, and you were everywhere, dude.
Happened. I literally don't know what happened. We had like a cheap normal ticket, and I just kept following the tickets and the wristbands and talking to people. And this guy had a horse, this guy had a horse, and here's your band. I'm telling you, by the end, I had like 5 bands on this wrist, 3 bands on this wrist, and 2 lanyards on my neck.
It's the way to do it.
Nice. Yeah.
Open access everywhere. It'll never, like, people are like, you're going to go back. I'm like, literally never, because I will never have that experience again. There's just no chance that I'm going to be like hanging with Peyton Manning and Patrick Mahomes next year. You know, it's just not going to happen. So, all right, guys, that's all I got for you. I got to run. Thank you, gentlemen. I will see everyone next time. And of course, we will be back here tomorrow with a panel. Peace.
That's dope.